Welcome back to the Raw Selection Private Equity Podcast. On the podcast today is a previous guest coming back, and it's Christen Paras. She's now the partner of the transaction team at MiddleGround Capital, and we're going to be discussing every private equity investor's favorite topic, which is all around exit strategy and what MiddleGround Capital are doing slightly different than any other firm I've heard of previously. Let's dive in. Christen, can you share a brief insight into you, please?
Yeah, good to be here. So I'm Christen Paras. I'm a partner at MiddleGround Capital. I co-head the transaction team. Live in New York City. Have been here my whole professional career. Grew up nearby in New Jersey, so not too far away. And I live here in Soho with my husband and 3 kids under the age of 4.
Lovely, lovely. So what's one mistake you see private equity firms or portfolio companies making, and what would you suggest to correct them?
Ooh, good question. I would say that I think private equity can be a little bit rigid in their thinking sometimes, and I think one of the things that we've tried to do at Middle Ground is continuously improve and break the mold and try new things. And if they don't work, then, we try to fail quickly and move on and be nimble. And that's something that, when I joined when Middle Ground was still a startup, it's very inherent in the culture, and we've worked to keep that as we've scaled and grown over time.
So it's interesting you mentioned as you joined in the early phases of the business, and the growth of a private equity firm is not always what's spoken about. We speak heavily about what we're going to talk about today with regards to portfolio companies and strategies around that. But what have you seen with regards to the buildup of infrastructure? Because it's something you guys have done differently. You aren't a typical private equity firm, lean headcount. You have lots of different facets and lots of different functions within your business. But your personal experience of that, how have you seen that kind of mistake-led business where fail quickly, let's try things differently, let's do something differently? How have you found working in that within a private equity firm?
So I think, for people to be successful here, you do have to kind of have that adaptability and learning agility, to try new things, to, really put your effort in, work to make a solution successful, and then be able to kind of measure that over time using the right KPIs that you identify, and, be able to then have infrastructure set up from a decision-making standpoint that allows the right groups of people to come together, to determine if that's the right path forward. So we've done that a number of times, and we have infrastructure in place where our senior leadership is meeting weekly, to talk about different facets of the business. So we have our typical Monday meeting, like a lot of private equity firms. We have the senior leadership of our investment team members, of our ops team, present to go through our entire portfolio, to talk about new deals, to talk about staffing across those teams, to make sure we're not bandwidth constrained anywhere, and any other special projects that need that audience to speak to, whether that's something that's being escalated, it's an issue at a portfolio company, or it's maybe a portfolio wide initiative that we have, that is interesting and important to everyone in that room, and it impacts other portfolio companies. So that's just one example of where we're able to do that, and sort of change course in real time. And then I would say, we have a management committee that is comprised of the senior leadership of the firm that meets, at least twice a month, if not more. And we have sort of quarterly board meetings where, we go through a number of business aspects, as well as, talk through how are we doing from a people perspective, and just a lot of emphasis on, some of the strategic objectives, but also the cultural objectives of the firm.
Absolutely love what you guys do differently. In what is a crowded private equity market, and to stand out, you've got to do something certainly different. So I want to dive into exits and focusing on that. So tell us about the kind of middle ground capital approach to the exit strategy.
Yeah, so I mean, it's exciting that we're actually here. We're a relatively young firm still. It's hard to imagine that we're only about 6.5 years old, and our first fund was only raised in August of 2019. So it's exciting to be at the point where we're actually harvesting our portfolio, which is in various stages right now. So we've had some full exits, we've had some partial exits by way of divestitures. And so, it's been an interesting time to sort of reflect from those processes, what's gone well, what can we improve upon? Middle Ground, two of our founding partners come from Toyota. So, we really have that mantra of continuous improvement. And so one of the things that we thought about, especially in this market where M&A has been depressed, sponsors haven't been exiting businesses at the rate that they typically would, is, when the market does return and we are in a position to exit more of our assets, how can we build a repeatable process that provides more optimal exit outcomes? So what did we do? We decided to build a team within the transaction team called the Portfolio Realizations and Exits team that focuses on just that. So I think a lot of firms, will develop an exit committee and sort of have a process in place whereby that committee will meet around the time that certain assets are nearing that transition period to an exit process, where you think about engaging a banker and doing all the prep work around exits. And that's great, but that's a little last mile. There's not a lot that you can kind of change or impact on that point from an exit strategy and positioning standpoint. So what our team, the exit team, really focuses on is kind of weaving that exit positioning and strategy mindset all the way from due diligence and underwriting of a new platform through the various parts of our holds, so that we can always be thinking about how to optimize outcome. So this year has been, we've had a real focus on setting up a lot of that infrastructure. What does that look like at each stage? And then starting to build out, specific processes and frameworks to hold the different stakeholders accountable at different periods in our hold, so that by the time we get to that kind of last mile where we're, in the room with the bankers kind of holding the pitch process, we have done what we feel is everything we can do to kind of ensure an optimal outcome. And for us, that's not just obviously, the best valuation, but have we built a business that more buyers want to buy than they did in the last process, if it's, a company that's traded before? It's kind of keeping our eye on those things throughout our hold.
Sorry to interrupt. Just a quick mention of our long-standing partnership with Grata. As you will probably know, the private equity scene is constantly evolving, and deal flow is moving now to proprietary and data-driven processes. Grata provides you with the data and information of over 7 million private companies. So if you're looking to improve your proprietary deal flow and improve the data access, then reach out to Grata today. Now back to the podcast.
So just so I'm clear, how is this differing from if you want to call it the value creation teams? I know you kind of operating partner, which you call them MD of Ops. How does that differ from your exit strategy team, or are they kind of all aligned? Do different people sit in different things? Just if you can give me some clarity over that, would be great.
Yeah, it's a great question. So the exit team is actually a cross-functional team. It's comprised of both transaction team professionals as well as operations team professionals, because they do intersect. There are some initiatives that are a little bit more operations oriented and some that are transaction oriented. And so, for one, having that kind of cross-functional viewpoint is very helpful. And then they are really, the exit team really focuses as kind of that central nexus that helps to connect the various stakeholders. Because when we think about any portfolio company, there's the deal team, with the deal lead that's, been with the company from underwriting, that's managed the execution of the value creation plan. There's the management team, there's the board, there are potential buyers, both sponsors and strategics alike. And then there's third party partners that, whether they be bankers or, other, kind of deal makers in the community that we want to keep close to a business. So the exit team sort of functions as, creating a process that allows, those stakeholders to operate very efficiently and harmoniously together to kind of drive that exit strategy forward. From a value creation plan standpoint, to answer your question, Middle Ground employs a deep bench of in-house operations professionals, many of whom really come from industrial businesses, whether it's, shop floor, they've managed, large divisions or large companies. They bring that expertise into the fold, and they're really working to execute the plan that we underwrite. But there are some other considerations, that we have to keep in mind when we go to exit a business. And so we can do a lot of these, we want to execute our value creation plan, but there's also a what's next? What do buyers care about? And how are we kind of tracking that? What are the things that kind of when we complete the bulk of our value creation plan, what can we point to that's, something next that either we can do or that the next buyer can do? What are the things that maybe really don't matter? What are the things that don't broaden the aperture from a, buyer universe perspective? Or what are the things that are going to maximize value or detract from value? And, do we have time to sort of still address those things? And so just kind of giving more scrutiny to those strategic initiatives that maybe aren't as well quantified or would be hard to quantify during our underwriting phase, where a lot of our value creation plan, really comes from. That we may learn from owning the business for a while. Well, we actually can't do this, or we actually found that it's better to do it this way. And as we kind of own the asset and have more familiarity, work with our management teams to think about, some of these other items that may have been, on our radar, but maybe were kind of underwritten as upside, or they were just kind of something that we had on our mind strategically, but no real accountability because at the time of, kind of acquisition and onboarding and then VCP execution phase, we were focused on, those kind of key objectives that we had already identified and quantified as part of our underwriting.
Have you found that because of this direction with an exit focused, have you found that your value creation strategy differs a little bit because the exit team kind of goes, we need to look at what creates value, and what we're focused on. Whereas, if we look at constraints in a business, it's all, a good chief exec will look at the business and go, these are the key constraints. These are the ones that bring the biggest return on investment. And what typically, yeah, I can't remember. I saw a post, I think it was from Alex Hormozy today. If your business isn't growing and you're working flat out, you're working on the wrong things. Have you started to see a difference because of the exit team saying, well, these are what the firms are looking for and this is what we need to consider? Has that changed for you guys yet?
Yes, I think that, it's a really important measure, especially when you're coming into, a new acquisition, right? Is really properly evaluating the exit risk. Who's a buyer of this business, or what needs to happen for, these buyers to be more interested. And what we don't always know before, but we try to dig into after the fact is, what held buyers back in this process? What were some of the detractors? And are those things that line up well with middle ground, or are they things that are maybe a little bit more of a stretch for us? If so, how can we bring the right resources, or how can we bring the right management team members into the fold that can really focus on some of those areas? So we're always going to be disciplined, within our value creation plan underwriting. It's really going to be on, the kind of the key items up and down the P&L for enhancing EBITDA, and then as well as, generating and optimizing working capital for, kind of generating, and maximizing free cash flow. But, are there other things or additional things that we can do? And so, one example of that is, what works really well for middle ground is if we bring in a CEO, or, if there is a CEO already in place, great. That's very commercially oriented and, has a really strong view of, product development and customer development and, penetration into different end markets. And, that pairs really well with our operational focus, right? Because, they can be focused on different things. And so it's kind of evaluating, when we kind of get into a company too, what are the relative strengths of the management team? Do our skill sets complement each other well so that we can tackle more of these items that future buyers are going to care about?
Good man. So what? So I'm interested. I'm a big believer that there's a Marcus Aurelius quote. There's nothing new under the sun, and I'm a big believer in that. But I am thinking now that I've never heard of a private equity firm that's built a team around exits. Doesn't mean I know every private equity firm by any stretch, but certainly a new one on that basis. what were the constraints in the firm that you looked at or you were beginning to feel as the business evolved into this exit process as as a new firm that drove the need and appointment for this particular team and division?
Yeah. So we're extremely process oriented. So for example, when a deal, we have kind of a process flow chart for many of our processes. So we've mapped out a ton of the processes within the firm. But just to give a clear example, from when a deal comes in the door, as a teaser, we have, I think it's a 54-step process flow that shows with different swim lanes, which shows, who's touching the deal at given points in time, what's happening at each step, that goes all the way to a funds flow. And that's, it's repeatable so that you don't have variation between one deal partner to the next. You have a standard set of templates that are coming to the investment committee that we're all very familiar with so that we can evaluate a new opportunity. We can tell where we are in a process so we can hold ourselves accountable. We know if there are speed bumps that come up, where we could expect some delays. We know when some of the key risks are going to be surfaced to the investment committee. So that's just it kind of creates a standardized workflow, which we really didn't have on exits. We had a little bit of that in the sense of we had an exit committee established where, every so often we would get together at different points throughout the year and sort of assess readiness of certain portfolio companies. But the readiness assessment wasn't standardized either. And then when you got into an exit prep phase, part of the process, they varied a lot. And so timing might potentially slip, and it wasn't always obvious to the exit committee as to why. So, I mean, for one, it just organizes us and it orients us around a standardized process, which we just love. We do that all day in our portfolio companies from an operations standpoint. We like to do it, even on the transaction team when we're deploying capital. So why not do that on exit to be more systematic about how we approach, realizing our portfolio? And if you think about it, it makes a ton of sense because, our LPs are obviously focused on, us optimizing our returns. And so what better way to do that than put dedicated focus on that?
I'm yet to meet a private equity investor that has been expertly trained in securing and attracting top talent for their portfolio companies. Therefore, I've written a brand new book exactly on that topic. I've collated all of the information from my years in executive search and spoken to some of the top private equity investors and put this all into a brand new book. We're giving away the first 100 copies to anyone who joins the waiting list. Check out the show notes and get your name down for this brand new book.
So, and really interesting. So, firstly, what are you using to map your process and your workflows out there? Where I'm an Excel guy and just built it on that. Are you guys exactly the same?
Yep, a lot of Excel. We use a different software to create our process flowcharts, which don't even ask me what it is because I don't know how to use it. I usually ship my Excel product to team members who are wizards in kind of process mapping. But yeah, a lot of it is Excel based and PowerPoint based in terms of the different templates that we utilize, and then it's also just creating sort of the forums for this discussion. So, for example, quarterly we do portfolio reviews where it's a full day exercise of, again, the senior members of the transaction team, the operations team, and we do a full run through of every company in our portfolio. And there's a kind of a standard set of materials that get pulled together well in advance so that we can all review them. And we go through anything there that, kind of jumps out as either being good or potentially needs to be addressed in some way, shape, or form, and surfacing issues. And then also following up on we also kind of hold an open issues list of quarterly focus items. So some of them, it's not that they're meant to be accomplished necessarily within the quarter, but that they've risen to the level of, okay, this needs to be something that we're tracking amongst this group. There's accountability there. There's a lead that could be internal to the middle ground. It could be a management team member. And then there's support. And then there's some deliverable or KPI, that would kind of denote when it's complete, and kind of a traffic like status of, are we on plan, are we behind plan, have we completed the initiative? And so that larger team comes together quarterly and reviews all of our portfolio companies, and part of that now is talking about forecasting exits, right? And so which is exciting. So it hasn't been a huge part of the conversation up until this past year, but when we go through each company, we start talking about the metrics of those companies that would set them up well for good exit timing. What's left? What do we need to see in order to make the determination to sort of enter the exit prep phase, and actually kind of think about the timing that's appropriate to actually exit one of those businesses. So we've started putting in place some more templates in terms of just different slides to review, different set of materials, so that that group can get aligned on, okay, there's a compelling reason to exit this business within 18 months. So let's start down kind of our Gantt chart of what that exit process timeline looks like, and start kind of customizing that for each individual company. So it aligns us, and it helps to orient us and organize our thought process on each individual company.
Like it. So, and with this fund focused on exits, we think traditional private equity firms, the partner, obviously has the people, obviously they're reporting into that role or supporting that role. But predominantly the partner did everything from deal origination through to assessment, through to portfolio management and exit. Now, we've seen obviously private equity kind of move a little bit, and you were in a business development role previously, and transitions into transaction roles. It'd be an interesting, unique perspective from you as well. As you've seen that focus on an exit, what are you now maybe doing slightly differently because you have somebody or a team of people going, there's a particular focus here? And it's a bit like if you've got a chief exec that runs everything in the business, whereas if you've got a CFO, they specialize and deal with that, and it takes it to another level. What are some of those improvements that you've seen as a firm because of that particular niche focus of you guys focus on exit?
Yeah, no, it's a good question. I think it helps us prioritize, some of the initiatives that we've identified. So, I can give you an example, and it there's a little bit of, it's the cross functionality and collaboration amongst our team is really helpful in this respect. So, we made an acquisition earlier this year in a company called Stare. It was a take private. And, we identified a lot of our traditional value creation levers. And then there were some things that we kind of put on our list of, let's keep our eye on these things. Let's think about this. And so then part of our process, following an acquisition, is to sit down with the investment bank that ran the process and get, a full presentation debrief on the process itself. How did you run the process? What did the funnel look like? Was it strategics? Was it sponsors? How many groups made it through to each phase? What were the things people really liked about the business? What held them back? What are the different value creation levers that you guys have thought about or that came up as part of that process? And really debrief all of that in detail. And so, some of the things that, our investment committee kind of viewed as, okay, that might be something that we do eventually, ended up getting pulled forward. Something we do very frequently is kind of shape businesses through divestitures, through add-ons, and then, do all the operational work around whether that's integration or, making sure that, that divestiture happens seamlessly, and, think through any carve-out considerations and kind of work through that. But kind of, shaping the business into something that more buyers will be attracted to. A couple other things we do that intersect is we run co-invest processes as well, with a wide, breadth of LPs in our network, many of whom are fund investors, some of whom are prospective investors, or we've developed a relationship with them on the co-invest side. And so that's almost like a mini exit process where we get some feedback from them on what, some of the things they like about the business, what are the things that concern them. we run a lender process during acquisition. We get feedback from lenders. So we're able to marry a lot of that together and overlay that on top of, some of the opportunities and risks in addition to the value creation plan we underwrote, and think about, how to sort of prioritize some of those items. And some of them may end up getting pulled forward, but, conversely, some might be, let's hold on here. Let's revisit this. So it's helped us to kind of think through timing and prioritization of different initiatives.
I sound like it. Well, it's quite a detailed run through of exits and processes there. But Kristen? What are your influences? What do you read? What do you watch? What do you listen to? Do you recommend that others check out?
Yeah, I mean, I read a lot of your kind of standard trade rags that come through email, which are helpful, if not a little bit depressing at times, especially over the last few years. But I mean, I read a lot as part of my job, so it's you never really know where the next the next big idea is coming from. I always love industry primers that a lot of our banking partners put out, or industry updates. Kind of our market study providers will provide us with a lot of detail on certain sub verticals within the industrial space. So try to consume as much of that as I possibly can. So I'm grateful that I have all the relationships on the business development side, because I end up getting more content than I could possibly read through. But it's really helpful for us because, we do have a thematic focus within the industrial space on a few different sub verticals. So it's really wonderful to have some of those relationships within the industry to, kind of be able to get smarter and stay current and kind of think about that in the context of the themes we invest behind. So it's a little bit of everything, not any one Bible, if you will.
Well, thank you very much for joining us for the second time, Kristen. A different role, business development, deal origination, previously, as well as investor relations, and now leading transaction team at MiddleGround Capital. So congratulations on your promotion from our last conversation, and thank you very much for sharing everything you have today.
Thanks for having me, Alex. Always a great time.
If you've not done so already, please do subscribe to the Private Equity Podcast. But till the next time, keep smashing it, and thank you very much for listening.